Hey guys, Jake here, and I wanted to do a quick video. I've had a couple of questions and a couple of conversations and emails about the growth of a high cash value life insurance policy. I think it's an important topic because a lot of people are, we're inclined to compare. You look at the high cash value life insurance policy and you say, okay, if I have my money here, it's going to grow at X. But if I had my money in the stock market or in mutual funds or CDs or real estate, how would that perform? And I want to clarify how this works a little bit better. The idea behind the infinite banking concept is not to create an investment strategy where your money's inside life insurance and that's where it's growing and you're going to eliminate the opportunity to do anything else. It's not either or. Instead, we're just creating a better place to access capital, and I'm going to show you that. But I first want to kind of dive into the growth of a high cash value life insurance policy. So first and foremost, the discussion always is going to revolve around rate of return, right? So what's the rate of return inside a high cash value life insurance policy? And inside our info kit, you can find a couple of case studies, but we see typically between 5 and 6% growth. Okay, over time, we're seeing good 5-6% growth. We're talking conservative growth. It's not volatile. It's not up and down. It's just very level and conservative. Okay, but the benefits of that growth is that it's tax free. Okay, and we're talking after all costs. Okay, so first, what I want to do is compare it. Compare it to what you'd have to do inside another investment to make it better. Okay, high cash value life insurance is not typically seen as a big performer. We're not talking about double-digit gains here. We're talking about safe, conservative, really competitive gains here. So let's take a couple things into account. So let's just say we're getting 5% growth. Okay, now, if we want to compare this to another vehicle, we got to remember this is tax-free growth. So let's take into account some taxes. So let's say we have a tax bracket of 30%. So not sure the exact math, probably around 7.5% there. You have to get about 7.5% before taxes in a 30% tax bracket to earn about 5%. Okay, so 7.5%. And then on top of that, there's certainly going to be a management fee, and we're just going to assume a very conservative fee of 1%. Okay, so we're upwards of 8.5% just to compare to what a solid, high cash value life insurance policy can do. Okay, so there's really no argument that it's not competitive. It's extremely competitive in nature. It's, to get 8.5% in the markets right now, in the stock market, specifically in mutual funds, we're not seeing that. That has not been for the last 10 or 20 years returns that have been consistent at those levels. Certainly in any year, the market can do well, but the losses have affected it significantly. So over the last 10 years, we've seen the market, S&P 500 has grown at about 2% a year. In the last 5 years, it's been flat, about 0 after the big dip and coming back. So basically, inside a cash value life insurance policy, you would have done significantly better over the last 10 or 15 years than you would have in the stock market. But again, this isn't the point. The growth is there. It's strong. It's competitive. Could arguably do better than a lot of scenarios, but that's not the point. The infinite banking concept hinges on this idea that your capital can be used in a variety of different ways, right? Purchasing cars, recapturing interest, all of these great things. But more importantly is the fact that this is completely liquid. It's a completely accessible place to get money. So let's say I've got $100,000 in my life insurance policy, right? And I'm thinking, well, hey, I can go make 20% in a real estate opportunity. And if you know anything about me, I invest in real estate. I've got a couple properties. I use my life insurance policies to do it. I'm not advocating just cash value life insurance. I think there's a lot of great investment opportunities. I just don't fall under the belief that that Wall Street and financial advisors are doing a great job at this. They're really falling short of what controlled investments can do. Real estate, and loans, things that you're in control of, business opportunities. But anyway, let's assume that you have $100,000 that you can access inside your life insurance policy. Okay. Well, let's say you've got an investment opportunity where you can earn 10%, 20%, whatever number you want to use. We'll call it 10%. And you're able to, earn this in a reasonable way. You've calculated the risk. It makes sense. And you're pretty comfortable putting the money there. Well, the idea is, instead of having this sitting in your bank account doing nothing, having it inside the life insurance policy is going to give you death benefit. It's going to give you some growth. It's going to give you tax advantages. It's going to have all those things. But now you've got this benchmark. Well, I'm earning 5% in my policy. If I can do better than that, great. Let me take that money, make better use of it, and I'm going to make a better profit because of it. And here's what I mean by that. So let's say you got $100,000, you borrow that $100,000 to make this investment at 10%. You earn $10,000 on this investment. Not bad, okay? If you didn't have the life insurance policy, this $10,000 would be a fully taxable gain, okay? But you do have the policy, let's say. So there's a couple other things to take into account. Well, the life insurance policy has earned 5%. So you've earned an additional $5,000 tax-free inside your life insurance policy. Great, but that came with a cost because the insurance company actually gave you a loan at 5% to use that money. That seems like a wash to a certain degree there. Well, the difference is this $5,000 lent to you by the insurance company is going to be tax deductible. So instead of having $10,000 of gains, I've got $5,000 of taxable gains that are going to give me a better overall return after that investment is complete. Okay. So really quickly, synopsis, I can take $100,000 out of my bank account, put it in, earn $10,000, put it back. Now I've got $10,000 in gains and my money's back in a taxable low interest bearing account. Or I can keep it in my policy. I can have tax advantages, growth advantages, significant growth advantages, death benefits, all those great advantages that come with high cash value life insurance. And I can take that money and I put that in that investment. I earn $10,000 on the investment, no difference. I put it back in the policy, but now I've got lower total taxable income. So I've saved taxes and I've overall increased the value of that investment. Compound that over years, you're saving tons of money in taxes and you're overall creating a better scenario and better use of your capital. So that's the idea. Everything kind of gets better with these infinite banking strategies that we're putting into play using high cash value life insurance. I mean, that's the purpose. It's not to restrict you, to make you decide this or this. The purpose is to give you a better place to put that capital. So that's kind of it. Let me know if you have any questions. Feel free to check out our info kit. The info kit actually has all kinds of case studies on the growth that we talked about, as well as some of these other ideas. So anyway, let us know if you have any questions, and thanks.